Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on oil. So just starting off with the weekly time frame, we had the break of our uptrend support line. We lost the uptrend from 2016 bounce that took place. And we had two perfect back tests and rejections. So here's our uptrend support line. We lost it. Next candlestick back tested and rejected. We saw our oversold bounce begin on the daily time frame, and we rejected again on the back test of this previous support, now resistance. So the bears are definitely maintaining control. We look at the daily time frame now. So we see an oversold bounce played out, but we knew we were going to set a lower high because of where we were coming from. There's no way we're making it back to that level. So we began to pull back, and we pulled back very significantly. 3 days of pullback, giving back almost 5 days of green. So I do anticipate a higher low to form. This bounce was significant enough to the upside that we can anticipate a higher low to form. From there, it's anybody's guess as to whether we set a higher high and continue with a powerful bounce, or if we see a higher low set, then we see a lower high, higher low, equilibrium pattern. Those are the two scenarios that we're going to be looking at. My odds, in my opinion, favor an equilibrium pattern where we look for our higher low, then we set a lower high, then a higher low, and tighten up. So the support right now is 43.75. Not very convincing that that's going to be our higher low. The lower wick is not very significant. We closed fairly close to that level, so not set in terms of believing that the bulls have established their higher low just yet. If we do hold 43.75 on Monday's trading, that will be a bit more convincing, and then I will look for a lower high to be set somewhere around the $46 range. So looking at it a little bit differently on the hourly time frame for some more details, you can see we're still setting lower highs. Bulls are not anywhere near breaking that pattern just yet. Bulls have to get over 44.85 resistance to break the first clear lower high, and right now our low is the lowest price that we've seen, that support I just pointed out. So that's the channel that we're watching. Bulls are trying to see a little bit of a bounce play out. We are seeing an oversold hourly bounce, and whether or not that will turn things around in terms of the trend on the hourly to start favoring the bulls, that remains to be seen. But just cautious bullish oil, because we know this weekly time frame is very clearly now favoring the bears for a longer term standpoint. So the daily chart oversold bounce has played out. The weekly longer term trend favors the bears, and we are looking to see if we do get this daily equilibrium pattern. USO on the daily time frame. So there's our bounce. Oversold bounce hit the highs. Now we're pulling back. The low is $9. If we break $9, I'm looking down at the next level of $8.96. There's a little gap there. So same scenario. Lower wick. Not convinced that our higher low has been set just yet. We'll see if the bulls can hold that on Monday. And then I would be looking for another resistance level, bounce attempt, and maybe a top out at about $9.50 if we were to see this equilibrium tightening pattern that I am anticipating. The weekly time frame rejecting from exponential resistance, very clearly having the bears in control. Left shoulder, head, right shoulder. The bearish reversal head and shoulders was confirmed when we broke 988. And now we're seeing lower highs and lower lows. So the bears are in full control of the long-term weekly time frame of USO. And just to see where we are on the monthly, let's get a longer-term perspective here on oil. And we zoom out and we see where we have come from. All-out dump in 2008, 2009. Recovery, all-out dump in 2014, 2015. And trying to see an oversold bounce, but not really doing much to change the trend in terms of breaking these resistance levels. So 62.56 was a resistance, now a lower high at 55.21. It looked like the bulls were going to turn things around here on the daily time frame about a few months ago, and we were looking for a break of 55.21 to see a move into the $60 range, but that has turned around, and you can see a very bearish previous 5 months that we've had have really taken a lot of steam out of the bulls. And it's the must-hold level is 39.23. If we break 39.23, it is a very significant bearish break on the trend for oil. So I appreciate you watching. Have a great weekend, and we'll continue to check in, keeping in mind that an equilibrium pattern on the daily time frame is more likely than not.